Good afternoon, Joe Victor with Allendale Incorporated, reporting Thursday, April 1st. First things first, and that is, of course, we're going to have a 3-day weekend. Friday, be in the dark at the Chicago Board of Trade, Chicago Mercantile Exchange. We look at grains as well as the livestock. Vacation day tomorrow, Holy Friday. At the same time, we'll be closed, of course, Saturday, Sunday. We start to turn into a market that has been pent up with a lot of anticipation of what the prospective plantings are going to be in quarterly grain stocks. I can tell you from first-hand knowledge, those corn stocks and bean stocks heavier than what the trade was anticipating. Acreage turned out to be more of a neutral type position. Now, one thing I want you to listen to very closely, and that is that prospective plantings for corn at 88.8 million acres. We've seen what we believe is going to be the low, because the propensity has been that in the June report, planted acreage report, when it comes to corn acres, be higher, on average, about 2%. Every year since 2004, we've seen higher corn acres in the June report versus the March report. And, of course, now we're looking at, 2% above the 88.8 prospective plantings. That puts you at 90.58 million acres. Presently, for old crop stocks, you're looking at about 15% end stocks to use. For new crop, if you look at the prospective plantings at 88.8 million acres, you're at 12%. And before you start banging the LDP table, when you're at 2% higher than the 88.8 million acres, you're looking at 90.58 million acres, and you're also looking at end stocks to use at 14.1%. That's still less for new crop stocks for 2010 versus 2009. And, of course, look at that. Technically, yes, we've done some damage to these charts. And, again, 450, 460 might be a reach at this point in time. We're saying that when you're 60% planted on corn, when you're 60% planted on beans, you need to have the marketing plan triggered. You've got to have it in place. And then, again, of course, we're looking at box option type strategies. That is something that you have to put in place. Don't try to come up with a marketing plan when you're harvesting corn, because, again, if you're looking at end stocks use at 14.1% versus 15%, we all know what the seasonalities tell us when we start to harvest the crop. Just as much as corn acres increase from March to June, bean acres are on lower when it comes to the June versus March planted acres for 2010. We did see today, as I said, light volume trade day, but again, take a look at the wheat spread versus corn spread. Seasonalities kick in for corn and soybeans. Higher markets are expected for both. What does that tell us? Mercantile Exchange Group gave us a gift when it came out on Tuesday, to close the business on Tuesday, that the initial maintenance and hedge margins were reduced for wheat, mini wheat, soybean meal and soybean oil, with lower initial hedges on those. Tells us that they want the investment community to come back. What that tells us is the seasonalities start to work higher. When we look at crop progress, condition reports on the corn, and of course, when we look at those condition reports and progress reports that start April 5th by NASS, that when you look at 2010 being a lot like 2009, we're not going to have a cakewalk when it comes to go ahead and plant this year's corn crop. When it comes to the cattle and the hogs, again, we saw the supply restricted, low prices, current low prices. We believe we're at levels where we need to be hedged. But again, we have to take a look at unemployment numbers. Unemployment tells us, yes, we are consuming poultry. We're consuming some of the pork to a degree, not yet ready. With unemployment numbers being as high as they are, we are not ready to go ahead into the red meat. But you're approaching the grilling season, and again, take a look at weather as to whether those major cities do the outdoor grilling and consume. Is it going to be beef this year, or is it going to be like last year and a lot of sausages, a lot of hot dogs and hamburgers that are put out on the grill, not steaks, when it comes to either big chops or big red meat consumption? Again, you're going to have a lighter day, not only today, but again, a new quarter, new month begins on Monday, and that's when we feel the funds are going to come in here. Look at the wheat corn spreads, look at seasonalities when it comes to corn and beans, and of course what it tells us is that yes, everything's working in tandem right now with lower corn, lower meal. You're seeing higher livestock. we start to see seasonalities kick in for corn and beans with higher numbers there, looking for, again, perfect time for hedging when it comes to hogs and cattle. And of course, with those higher corn and soybean meal numbers, looking at higher value when it comes to the corn, 415, maybe 1050 when it comes to the soybeans. New crop, what we're seeing is higher values there, lower values for the cattle and hogs. And again, I invite you to make sure that you take part into the reduction that we have on the Allendale Advisory Report on the website, right at the top of the page. Make sure you give us a call at 800-262-7538 or send us an email. This is Joe Victor with Allendale Incorporated, April 1st on a Thursday. We'll be back with you on Monday morning.